So, welcome back traders. Before you skip this video, I want you to understand something very important is the entire Forex market this week has basically been controlled by one dominant force, and that is the US dollar. If you don't understand what the dollar is doing, you will misunderstand every other pair on your chart right now. So in this breakdown, we are going to go through the DXY, gold, Euro USD, and USD JPY, and then connect everything together so you clearly understand the overall market direction heading into next week. We start with the DXY. The dollar has shown strong bullish continuation throughout the week. The market has been pushing higher with consistent momentum, showing that buyers are still in control of the overall structure. There is no clear weakness in the move, and that tells us the dollar trend is still intact. From a macro perspective, this kind of strength usually comes from expectations that interest rates will stay higher for longer, or that the US economy is still performing stronger compared to other major economies. When yields remain attractive, capital continues to flow into the dollar, which keeps it supported. So overall, the dollar bias remains bullish going into the new week unless we see a clear shift in sentiment or macro data. Now moving into gold, XAUUSD. Gold is in a clear downtrend, forming a series of lower highs and lower lows, which confirms that sellers are still in control of the market. One key resistance area around 4,572 has been tested multiple times and continues to reject price strongly to the downside, reinforcing that bearish structure. Now what this tells us is very simple. Gold is still under pressure, and when you combine that with a strong dollar environment, it makes sense because gold and the dollar usually move inversely. A stronger dollar makes gold more expensive globally, and rising yields reduce the attractiveness of holding gold since it doesn't produce yield. So the bias on gold remains bearish for now. Now moving into Euro USD. Euro USD was previously in a downtrend, forming lower highs and lower lows, showing clear selling pressure in the market. However, recently we've seen a shift in structure where price started forming higher highs and higher lows, and the key level around 1.16 has been broken and flipped into support. Now this is important because it means Euro USD is no longer in a clean bearish trend. Instead, the market is now in a transition phase where it is trying to decide whether this breakout is real continuation or just a temporary correction. So at this point, Euro USD is not fully bullish and not fully bearish. It is neutral, and we are waiting for confirmation around that flip support zone before we can decide the next major direction. So overall, Euro USD remains neutral to slightly bearish unless we get strong confirmation of bullish continuation. Now moving into USD JPY. USD JPY is in a strong uptrend, consistently forming higher highs, showing that buyers are fully in control of the market. A key support area around 158 has been respected multiple times, and every time price returns to that zone, it gets rejected back to the upside, confirming bullish continuation. Now when you add the macro layer, USD JPY is one of the clearest expressions of interest rate differentials in the Forex market. The US dollar remains strong due to higher yields, while Japan continues to maintain historically low interest rates, which keeps the yen weak in comparison. So the overall bias remains bullish on USD JPY. Now when we step back and connect everything together, the picture becomes very clear. The entire market this week has been driven by USD strength. The DXY is bullish, showing strong continuation. Gold is bearish, reacting directly to dollar strength and higher yields. Euro USD is in a transition phase, trying to find direction after a structural shift. And USD JPY is strongly bullish, benefiting from both dollar strength and rate differentials. This is not random movement. This is a coordinated market reaction to one dominant force. And that brings us to the most important question going into next week. Is the dollar going to continue this momentum, or are we approaching a point where the market slows down and starts rotating? Because once the dollar changes direction, everything else in the market will adjust with it. So I want you to ask yourself right now, are you trading in alignment with the dollar trend, or are you waiting for a reversal that may not even be confirmed yet? That difference is what separates reacting to the market from actually trading with structure and intention. And that is everything for today's analysis, traders. Stay sharp, stay disciplined, and I'll see you in the next one.